Thank you very much. Thank you, Christian. Sorry for this short delay. I'm working at Equam. We are managing Equam Global Value we've been managing it for 7 years. We do value investing, so we like to look for companies that have predictable cash flows, that are owner-occupied, so managed by their owners, and that we can buy at a discount. So Elecnor is I think, a very good example of what we are looking for. It's a Spanish company. It's very well known by Spanish value investors, but maybe not so well known by foreign investors. So I think it could be a good opportunity for you guys. This group is electricity-related group. It's got 3 divisions. Historically, it's been an engineering company that provided engineering services mainly related to the electricity world. So 60% of the revenues are coming from electricity projects, EPCs for solar or wind or electrification lines. And with the years, they've been building a portfolio of assets, both in the wind park area, which they have grouped within Enerfin. And they have also a portfolio of assets for electricity transport in Brazil and Chile. So this last company has a financial sponsor that joined the company Celeo some years ago, APG, in order to take advantage of lots of opportunities that are arising in this area. So it's very late, so I'll go straight to the point. What we like about this company is that, according to our internal valuation, which I'll try to explain, this is worth around 30 euros per share, and it's trading at 12.6, despite the very recent spike in the price. So, for me, it's very difficult to understand because this company is in an area where there's lots of growth. The energy transition requires lots of investment in new generation assets, lots of investment in new grids and upgrades of grids, because the production is going to be with a different footprint. So there's lots of demand here. And it's difficult to understand for me that a company that is in such a good area is trading at these low prices, low valuation. But there are some reasons for this. And one of them is the complexity of the group. So this group has traditionally been consolidating all these different activities together. So an engineering business, which is completely different to asset management. Engineering, low margins, high volumes, no debt, and asset management, high margins, high predictability, and also lots of debt. So everything was bundled together, and it was very difficult to analyze. But this is changing now, and the company has grouped all its activities into different subsidiaries, and now we can analyze each of the businesses one by one. Also, this company has been very obscure. They were not very open in giving information, and so it was difficult to analyze it. But this is also changing. They are now reporting EBITDA and net debt and stakes on an asset-by-asset basis, so we can run a sum of the parts valuation and be quite certain about how much this company is worth. They are also trying to reach out to the world. They've hired a PR consultancy to try to explain to investors how the business is. And the other reason for this undervaluation is liquidity. It's not very liquid, so large funds cannot come in, or they have to do it slowly. And they are trying to solve this with a liquidity contract, but this, doesn't help very much. So these are the reasons, but I think they are addressing them, and there's also some short-term catalysts and tailwinds that can put this crystallized value of Elecnor. One of them is that they've announced they're looking for a financial sponsor to join Enerfin, that is the wind asset management company. And if that happens, that would realize a valuation that would show the real value of this division. No? Energy prices are going up. Some of their assets are regulated, so they're not impacted by that, but other assets are selling to the market, and they are having a big impact in revenues and EBITDA. The FX, which was a big negative in the past because they have activities in Brazil, is now turning positive, and also inflation is positive because most of the regulated revenues are CPI linked. So once inflation starts to build into the contracts, they will see an increase in revenue. So all these more short-term elements are here to also help with the valuation. So it's not just that it's cheap, it's I think the right moment to buy. I will try now to explain our approach to valuation to each of these three areas and then adapt the valuation so that you can see our sum of the parts calculations. Starting with this engineering company, it's, as I said, it's very focused on electricity, and they're doing EPCs for wind and photovoltaic. They also have an IT consultancy business where they work with telecoms operators and the sort of, and they also do construction, but it's basically electricity and EPCs for generation and transport. They're quite international, so it's not just a Spain-based company. Most of their new projects are outside Spain. They've won large projects in Australia, in the US, and they're starting businesses in Italy and the UK. So it's not just Spain. They're taking advantage of opportunities all around the world. I brought here some of their references just to give a better idea of what they're doing. So they're building a large photovoltaic project in Panama, windmills, wind parks in Brazil, Australia, and Spain. They are building transmission lines in Brazil, and they're maintaining a Long Island line. They are building a fiber network in Piemonte. So this is the sort of projects they're doing, essentially. And our approach to valuation is, well, quite simple. No? The company has growing revenues. Margins are deteriorating a little bit after the COVID-19 problems. They say this is going to recover. They've built in some incentives for management to look for high margin projects, not just growth. And I trust that they can recover past margin levels. But anyway, even assuming that things stay as they are and they achieve this almost 4% margin with current revenues, we believe this company is worth around €1 billion. Remember, that was the market cap. There was a transaction quite recently where Vinci bought Cobra, which is a very good comparable, owned by ACS, and they paid 4.2 billion EV for a company that had 500 million. That's 8.3 times EBIT. So if we apply that, it's 900 million valuation. And otherwise, we can use a 15 times PE, which we use normally in our valuation. We're going now into the wind generation assets. So this is a collection of wind parks, basically in Spain and Brazil. The regulatory regime of Spain is, well, basically, it's now everything goes to the pool. They sell on the market. So they have a sensitivity to energy prices. But then they're always hedging part of their production. So last year, 2021, was a year when electricity prices in Spain were very high, but their EBITDA was just normal, like other years, because of hedging. Now those hedges are expiring. They're hedging at level at prices which are twice or 3 times larger than previous year. So their hedges are now at 120 euros per megawatt hour versus 40, 45 the past year. So we are going to see a clear increase in EBITDA in Spain just thanks to the greater energy prices, maybe double what they did last year. In Brazil, the regime is completely different. They've signed PPA agreements with Electrobras and CEMIG, other commercial companies, and there, well, they have a 20-year agreement with a fixed price, which is adjusted with CPI. And the same is the case for Canada, where they have a 20-year agreement with Hydro-Quebec. So we have these two types, so regulated in Brazil and Canada, and pool prices in Spain. But now they're starting to do a bit the opposite. In Spain, they opened a new wind park, and they sold a PPA to Cepsa. And in Brazil, they are trying to do, the new parks are on a merchant basis, so they sell to the market. It's also very interesting to see the very high load factors in Brazil and Canada. It's incredible. They have their parks very near to the coast, so wind is very constant, very strong, and so they generate a big return on their investment in these places. It's also interesting to understand the pipeline. So since they are an engineering company, they can generate new projects, and they've announced they have 8.4 gigawatts of pipeline. We don't know, because they haven't disclosed what is the level of this pipeline, what's ready to build or pre-ready to build, we don't know. So I've not included this in my valuation, but when Vinci acquired Cobra, they paid 40 million euros per gigawatt of ready-to-build pipeline. So they are going to pay 40 million for every gigawatt that comes on stream over the next 7 years. It's just a reference, but maybe we could use half of it. You know? But we don't know. We don't have the information. I think they are going to start disclosing this, but for the moment, I've not included it. And so my valuation is, I'm using market multiples of 12 times EBITDA, or a 1 million euro per megawatt, which is basically the cost of producing these assets. And I come up with a valuation of around 760 to 900. Remember again, market cap was $1 billion. The engineering is worth around $1 billion, and these assets are worth also almost $1 billion. This is a sum of the parts valuation. If you go into their annual report, you can see each of the assets, as I was saying, and you can do really a sum of the part valuation. Then this third division is Celeo, in which APG acquired a 50% stake, 49% stake. They are managing and owning the electricity grid assets in Brazil and Chile. The regulatory regime here is also quite simple. They get a concession. In the case of Brazil, it's for 20 or 30 years. And they get a fixed price, which is adjusted with CPI. And it's just that, provided that they do have the network available, they get paid. Chile is the same, but with a difference, which is that concessions are perpetual. So they own the assets, and only every 10 years they get an adjustment in price. So they have these regulatory periods. Every 10 years there's adjustment according to different variables. So this is CPI. Both of these asset revenues and EBITDA are CPI indexed, and they're very, very reliable. There's very little credit risk here because the regulator or the manager of the system collects the cash from all generation companies and all commercial companies and pays to Celeo. And if someone doesn't pay, they get shut off, and the rest of the users have to pay for them. So there's very little credit risk, and it's very predictable. And then they have this third asset here, which is Spain. It's thermosolar. It's a completely different asset. In fact, it was a problem asset because it was created under a regulation in Spain. That regulation changed in 2014, and the returns of this investment were really collapsed. So now they put this asset into Celeo, and it's basically going to be able to pay debt and a little bit more. So it's not I think there's not much value here. But it's not a problem because it's regulated until 2037. So my valuation here is between 12 and 15 times EBITDA. 15 times EBITDA is more or less what other companies are trading. So National Grid is trading at a bit higher than that, Terna a bit lower than that. So it's more or less what they've achieved. There are also transactions that are taking place at that level of valuation. And if we use a conservative 12 times EBITDA, well, that's basically what Celeo paid, the valuation that Celeo paid when they joined as a financial sponsor. So we have that floor because someone has paid that valuation. So if we add everything up, basically we get from 2 to 0.5 billion equity value, which is 23 to 29 euros per share. It's trading at 12. So we see here a very reliable cash flow stream, CPI adjusted, trading at a very steep discount. There's, as I was saying, additional sources of value. If you want to value the pipeline, I know this is more intuitive, but you could use 20 million instead of the 40 million paid by Vinci. That would add 2 euros per share. Or if you consider the impact of higher energy prices for the coming 2 or 3 years, which have not been included in my valuation. As I said, I was using last year's EBITDA, which was affected by the hedges. If those hedges disappear or prices go up to 120 euros per megawatt hour, which is current hedging, then EBITDA is going to double. If you do that for 3 years, that's an additional 1.3 euros per share. So that's what we like about this company, is valuation and stability. The company is owned by a group of Spanish families. They've grouped their shares in Cantiles company, so there's not much liquidity, as I explained. And I don't think this is going to happen in the short term. But what we like of it is that they are very conservative. They're not doing strange things. They are creating value for themselves, and that's what we like. We like to join people like this that are creating value and just ride with them the cycle or whatever. This is my presentation. If anyone has any question, I'd be happy to try and answer.
Yeah, on the first segment in the construction, is there lots of project risk there?
Lots of?
Project risk, execution and liabilities. And
there's always, from a working capital point of view, there's no risk. From a credit risk, there's always potential risk that someone may not pay, but they get paid in advance. So like all engineering companies, they get paid in advance share of the project. And in the execution, of course, there is not much information available. I've been asking because of the falling margins, and I've been trying to see if there's any execution problem, but there's no information. So all they're saying is that some of the projects are delaying the accounting of margins because they are not sure they can achieve it. So there may be some risk. And regarding cost, they fix the price by everything they have to buy, and then they fix the price after they've bought. So in theory, there shouldn't be risk with that. But maybe in some EPCs, they are finding problems buying solar panels at different prices to what they thought. But honestly, I've asked, but they're not disclosing anything about that. Okay. Yeah,
I'm wondering, you mentioned the controlling families and the fact that there's very little information that they share, that they could do a better job at that. So in terms of the price to value gap closing at some point, do you have any catalysts in mind, or is it just a long wait?
Well, it's been a long wait. I think that there's these changes that are going on, the most important of which is the possible opening of the shareholding of Enerfin to a financial sponsor that would raise a valuation point. And maybe that helps people to understand how cheap this is. But apart from that, well, and also the evolution of energy prices. This first quarter has been very good, in part because of this energy price evolution. So maybe that's also a catalyst. Apart from that, it's a lot about waiting. Okay, perfect. Thank you very much.